I'm looking for something that will fake a lot of people out. I think will gap up post earnings, tag this resistance line as we've tagged it before, tag it once again, get rejected, and move down for the rest of the upcoming months to go back all the way to 305 to fill this gap by mid-October. I think that's the most likely scenario. That's just my humble opinion. So based on the PC, based on the CPC, based on the BP/SPX, based on the daily chart, based on the momentum, based on stock market seasonality, what we're looking for is continuation to 444, reject, come back down, fill the gap at 431, and potentially form a double bottom with a positive divergence. Welcome back, you legends. I'm Dr. Cal, and that was a very quick rewind from yesterday's video. S&P 500 rallied just under 444 as we expected. Triple Q's NASDAQ to 370 just as we outlined yesterday. The VIX went back to touch the bottom of this ascending channel just as we expected. Nvidia rallied post-market all the way above 500 and very likely will open tomorrow with a huge gap to tag this upper resistance line just as we expected. So where is the trap? Well, it is here. This is the exact trap that we're talking about. A quick counter move all the way back to the 50-day moving average. We're pretty much 1 day away from that bull trap completing on all indices and on Nvidia. So it's time to be very cautious. I began to close out long positions. By the way, guys, you can follow all of my trades, investments, and trade setups, as well as my daily live analysis in the Discord by joining the trading community. You'll find the link in the description below. So what happens next? Well, it's very simple. We are now looking for signs of rejection just at the 50-day moving average, just at this prior level of resistance, prior level of support. Once broken through, will now act as a level of resistance. This is exactly what we were talking about yesterday, legends. It's time to be very careful. This rally wants to suck more bulls in before it puts in the actual bottom. This week we had two big risk events. Number one is out Nvidia. It played out exactly like we wanted it to and exactly as we expected. Number two is Jackson Hole, and that's going to be 10 a.m. Eastern Time Friday morning, which means we can have one more day of the stock market rally sucking in more and more bulls. We're going to be looking for rejection candles. We're going to be looking for switches in the short-term time frames like the 1 hour and the smaller time frames. Right now, we are right up against this significant resistance line in the 1 hour chart to close the day. The stochastic is at an overbought territory. Just be careful if we gap up to start the day tomorrow. That could simply be a gap to sell, especially with momentum being overbought, especially with Nvidia, especially with the entire market rallying ahead of Jackson Hole. Remember, guys, what happened just before Jackson Hole last year? Exact same thing, rally ahead of Jackson Hole, then we got that soul-crushing crash. Are we going to see a repeat? Well, so far we're getting a repeat of what happened leading to Jackson Hole, and now it's time to be alert, be cautious, know exactly what the market is doing and the risk involved. So on the daily chart, we're almost there at 444. We got extremely close today. We're almost at the 50-day moving average. Again, the key is going to be tomorrow's reaction just before the market close. We'll be looking for things like rallies at the beginning of the day. That's going to be mostly retail traders buying the market. Then we're going to look for sell-offs at the end of the day. That would be a classical bull trap. We get rejected here, guys. Very likely we move back all the way down to fill the gap at 431. Just as we mentioned earlier, even in the best case scenario, if we assume that this is the bottom, even in the best case scenario, and we assume this is the bottom, we are more likely than not going to get a negative reaction at this prior level of resistance. That's how the market likes to trade. It breaks a level, comes back, retests it, and usually that's the perfect opportunity to exit positions, sell the market, or even go short. It's the exact same look on the NASDAQ, guys, almost there at the 20-day moving average and the 50-day, the prior level of resistance, double top here at 371 and change, a bottom here at 371.8, broken through, acted as resistance on this back test, and it will likely act as resistance again tomorrow. So just be careful. It's all playing out exactly like that bull trap scenario that we laid out yesterday. Let's take a look at the VIX. The VIX backtested this prior level of support in this channel. If it breaks this channel, that will be the first bullish sign in my opinion. If it holds, just be careful. It will likely mean that we'll get another bounce in volatility. And if we do that, that will lead to another sell-off in the market. Best case scenario, guys, is that the VIX actually breaks this channel, moves back down tomorrow, comes back on Friday and next Monday and Tuesday, when the market presumably reacts very negatively to whatever Jay Powell says at Jackson Hole, and the VIX moves back up, creates a right shoulder for a head and shoulders top. The market makes a lower low versus this low on Friday. So it breaks 433, goes back to 431 at least to fill this gap, and the VIX fails to make a higher high that will establish a bullish divergence that will likely call the actual bottom that can be traded in the medium term to the upside. What's happening with the New York Stock Exchange Summation Index? Pretty much exactly what we're looking for, right? We're always looking for this double dip in the McClellan oscillator. The second dip usually corresponds with the market bottom, the real one. Again, here's another example, double dip. The second one corresponds with the market bottom. Again, guys, a double dip. Here it is. The second one corresponds with the market bottom. We got the first dip. We're now looking for this counter trend rally to get rejected, suck in those bulls, begin to trap them, and that will lead to selling into selling if we get any negative reaction of Jackson Hole, or if we begin to see selling on Monday. That will create the second dip that we're looking for. The second dip usually, guys, produces a lower low on both the New York Stock Exchange, the NASDAQ, and the S&P, and that low tends to be the actual tradable bottom. Same exact thing, guys, on the NASDAQ Summation Index. Here it is. We get a dip, a second dip, and there it is. Dip, second dip. There it is, a dip. We're now looking for one more day of upside, one more day of rallies tomorrow, and then we're looking for a sell-off after that. What do our projections look like? Well, let's draw those projections out just to simplify what we're looking at here, guys. Bottom on Friday, rally into August the 24th, a sell-off back down into August 30th, and that creates the second bottom that we're looking for. Let's use the measuring tool to pinpoint exactly the trading day that we're looking at. So 17 bars, that means tomorrow, Thursday, is the 17th trading day. What happens usually on the 17th trading day? Here it is, Almanac Trader. This is the seasonality for the market in August. August the 17th trading day, not the date, the 17th trading day. We usually get the top, then a second dip into the 19th and the 20th. What do we have here? 17th trading day, that's tomorrow. Again, guys, be very careful. This bull trap is playing out exactly as you would expect. When do we expect the bottom? Let's draw this out again. We're looking at the 20th to the 21st trading days. Again, perfect. So we're looking at August the 30th to August the 29th, between these two trading days tomorrow to find that actual bottom. Economic events tomorrow, guys. Before the market open, we'll have the durable goods orders. Not really that important. Friday, Fed Chair Jay Powell speech at 10:05 a.m. That will drive a lot of volatility. Expect a lot of crazy ups and downs Friday. This is going to be the market moving event. And as always, guys, when the market rallies ahead of a key event, it usually gets disappointed and pares back all of those gains and sells off. When the market sells ahead of a key event like CPI just a couple of weeks ago, here it is. It usually, guys, rallies post CPI. That's what happened last week. We're now expecting the opposite with a rally ahead of Jackson Hole and a sell-off post Jackson Hole. That's the most likely scenario. That's exactly how this bull trap is playing out. Just be very careful out there, guys. Today's video is just quick and to the point. I'm not going to bore you with any more details that you don't need. The trap is in place. Be careful. Tomorrow is likely the last day. That means we are 1 day away from that trap beginning to really punish Johnny come lately bulls that are now buying after 4 strong up days. If you enjoyed this video, slap that like button right in the face. It's totally free and it helps us out. Put more of these videos out for you guys. If you watched till the end and you did not enjoy the video, I thank you for your time and attention. That's all, folks. I'll catch you tomorrow. Bye-bye.
Oh, wow.